Hey everybody, Courtney Smith here with our April 19th edition of Wall Street Winners. We're just keep racking up the profits here. It's awesome. We've got a big bull market. I've got a big bull market here in disclaimers. So let's break this down. This is really going great. So I thought we might get a little bit of a dip. We didn't really. We hardly did anything last week, but we're continuing to bull higher. This is a bull market. You must be long. You must be strong. Look at the purple predictor. See how much faster it's going up than the actual price? The price is doing great. It's going up at a greater than 45-degree angle, but the purple predictor is skyrocketing at about a 60-degree angle, which shows that the smart money is buying this rally. And we want to do what the smart money is because, well, we're not that bright. So we just want to know what the smart people are doing, okay? But that shows that there's a lot of power behind this bull market that we've got going here. Over here in the industrials, also a strong bull market. Very strong. Look at the buying pressure. Now let's break this down a little bit. That's the little green line in the upper right-hand corner. And it's getting up to a level, not quite, but we're getting to a level that's unsustainable. So I think this bull run can go for another week. Then we might pause, okay? We always have pauses in the market. The selling pressure is extraordinarily low. You can see that there's only one time in the last year that it was lower than this. There's just nobody selling in this market. And so as a result, of course, it's going higher. But look for them to kind of alligator jaw together a little bit in the coming week. Watch the buying pressure come down a little bit, selling pressure go up a little bit, but not enough to stop this bull market. We're not in danger of a bear market. Now remember, I told you in March of 2019, there would be a bear market in March of 2020, and there was. But we're not in the conditions where we're going to have a bear market right now. It would have to be months from now before we see a bear market. So let's keep focused on the long side here because we need to be long and strong because that's the way to make money in the market. The market's telling us to be bullish. We got to be bullish, except in the Nasdaq. The Nasdaq has yet to make new highs. Notice that the purple predictor is back to being neutral. So it's not telling us to be in Nasdaq stocks. So we need to be in interest rate and economically sensitive stocks, which are represented in the S&P and the Dow and not in the Nasdaq. You got it? So for a couple of years there, we wanted to be in the FANG stocks. We wanted to be in Apple and Facebook. No, now we want to be in boring old stocks because that's where the action is, and we always go where the action is. We go where the money is. We don't have a philosophy, or I shouldn't say it, an ideology that we got to always be in tech. No, we go where the action is because that's how you make money in the market every single year for 50 years. Seasonality, bullish. Now, we're coming up to the end of the seasonal period, the normal seasonal period, which is April 30th. But remember that it can continue beyond that, and we would say beyond to a month. So what will happen is that red line, that's our line where we want to, kind of modify, where we would turn our bullishness off. I'm going to start to move that red line up, probably up to about the 210 level, and then a breakdown below that, we would switch out of being bullish. Now, we've been talking now for a couple of weeks now, almost 3 weeks, about the bullishness in the utilities. Once again, we're bullish. We got to be long Utes now. See what I'm saying? We go where the action is. Do we want to go in those sexy high-tech stocks? No, we'll go to utilities now because they're outperforming the market. That's where we want to be. All right, the seasonal pattern, according to Stock Traders Almanac, we want to look at the purple and red. They're saying we're going to see a little dip here this week. And that's within, though, a major bullish seasonality. Wow. Money's coming out of the bond market and into the stock market, and that's what's helping propel this stock market much higher. We always need cash to make a bull market occur, and we're taking it out of cash, we're taking it out of bonds. The stock market risk indicator, though, it's kind of pausing here a little bit. We haven't made a new high on it, so that's something to look at. But that's, of course, because of those Nasdaq tech stocks that's causing the risk indicator to peter out here. Global shares are starting to pick up the speed as well. And the yield curve, interesting. The first real significant dip, the first time we've made a lower low and a lower high since, I don't know when, a year, over a year. So this is rather interesting to me. Now, we've been telling you for weeks about how long-term interest rates were going to pause. They were going to stop going up, and we've seen that. That prediction was unbelievably good. Nobody gave you that prediction, but I did, because I show you how I come to that conclusion. So we've got that dip in the yield curve. I'm okay with it for now. We'll have to watch it closely, but we'll watch it closely. All right, bonds popped up. We were stopped out of our short bond position. Fully paid up members know that, but all our other trades made money. Okay, because we're long and we're strong. Now, this rally is not long-lived. So, in other words, yields coming down, like we saw here on the previous chart, which is bonds going up, it's not going to last very long. Look at the purple predictor. The smart money's still selling bonds. So, I called for the rally. I think we can go a little bit further. Maybe we get up to 142, 143 on TLT, and then we'll probably start the bear market again. Now, this was interesting. I'm going to stop here for a minute. So the green line is Treasury yields on the 10-year Treasury notes, and we've been rocketing up as we have been hammering on you for predicting for a year, okay, that we were going to see a rally in yields. And we did. Now we've got a little dip. And we talked about this dip for some time, for a couple of weeks, because we saw gold in a bear market. That's the gold line. The chart up at the top right, that's the CRB. It started to come down. And the blue line, which is 10-year yields in Germany, they were coming down. So we said we'd probably see a pause here. But now all of them are going back up again. This is another reason why we're just not looking for yields that came down. Okay, now I'm going to tell you right now, you can write it down on your calendar. Yields are going to start going back up again here. Maybe give them another week. But our leading indicators of interest rates are now telling us that we're going to see higher rates in the coming weeks. So look for that to occur. We've got our little dip, our little correction, a little bit longer, maybe one more week, maybe 3 days, and then we're going to turn around and start going back up again. Okay, now that's hurt the dollar. So the dollar has come under some pressure here. I think also, too, the dollar doesn't like the stimulus package that's being talked about, because even though it's called a stimulus, it's not. Even though it's being called a jobs plan, it's actually going to reduce jobs. So I don't think they like the economic outlook for the U.S. down the road. Right now, booming. But the new policies that the government wants to put in haven't been passed yet. The jobs plan, they call it. That would have a bad impact on the economy. Maybe not put it into a recession, but certainly slow it a lot. Gold. If dollar's down, gold is up. Now, I told you about this double bottom. You got to listen to your Uncle Courtney here. Now, the thing is, I'm not going to get long gold. I think that the situation is starting to get more and more bullish, but this is a pretty feeble rally at this point. It's taken quite a while. There's not a lot of support for it. So I'm going to hold off for a little while, wait for the next dip. I could wait for another month or two. It's not going to be anytime soon that I'm going to get long gold. However, all three of our indicators are now bullish here. So that's a big change. We haven't had all three bullish for, I don't know, since December of last year. So this is a big turnaround here. And fully paid up members, you'll see another indicator that's also bullish as well. And of course, if you're not a fully paid up member, really, come on, you can afford the peanuts to make the money that I'm showing you how to make. So WTI, now I'm getting bullish again on WTI. Look for this to get and break through the 68 high that we made before. The dip is over. We're now going to see it start to increase. We're seeing more and more parts of the world open up from COVID. That's bullish for oil. The supply of oil is not going up, but the demand is back again. So look for oil to start to continue to move higher and break to new highs. We're going to go to 70 now. And finally, Bitcoin, I told you last week, if it broke to new highs, you got to get long. So we got to get long. You got to be long already. But here's the problem. The purple predictor did not follow through. The purple predictor, if you look at it in the upper right-hand corner, it's moving lower and it stopped the rally. So I think you have to be long, but not strong. So in other words, not have a big position on, but have a position to the long side here. Put a stop in probably under the lows that we made a month ago at around 50,500. Right around in that level's got to be where your stop loss is. All right, freebies. Love having you here. Fully paid up members, hold on just for a second, and we'll just kind of revel in the money we're making.